Hi, welcome to the Proactive Social Impact Fund's LinkedIn Live, featuring Dr. Canaan Van Williams, the managing partner of the Proactive Realty Group. My name is Bill Houston. I am the founder of CrowdMax Real Estate Crowdfunding Marketing Strategy Consultancy. Today, we're going to talk about real estate crowdfunding. Dr. Van, you want to introduce yourself, and then I'll get into the questions.
Yes, sir. I'm Dr. Canaan Van Williams of the Proactive Impact Funds, proactiveimpactfund.com, and the Proactive Realty Income Funds, and the Proactive Realty Group. And this is my 25th year in real estate experience. And I'm here on LinkedIn Live with Mr. Bill Houston.
All right, let's get right into it. So Dr. Van, what exactly is real estate crowdfunding, and how does it differ from traditional real estate crowdfunding?
Okay, I'm glad you asked me that question. Just one second, I'm referencing my notes because I spent a lot of time last night on this reviewing. Real estate crowdfunding pulls funds from multiple investors to finance projects, allowing people to have fractional shares of the property with lower investment thresholds compared to traditional methods.
Great. You mentioned the term fractional shares. Can you explain that concept in a little bit more detail?
Yes, so a fractional share is just like a fraction. So say if there are, let's use 100, even number 100,000, and 100 investors come in at $1,000 each, then they'd each have a fractional pro rata share of that particular offering. So fractional real estate investing as it relates to this and the crowdfunding, invest in property shares to reduce the cost and the risk, understanding the legal and financial implication of owning part of a property. And a small disclaimer I should have made at the very beginning is that this isn't intended to offer or solicit securities. Past performance is no indicator of future results, just so that investors know it's not a guaranteed product. It can lose, all or part of principal. However, Proactive has a great track record, but legally that disclosure has to be made.
Yes, absolutely. And for the Rancho Affordable Living Project, also currently in the testing the waters for regulation crowdfunding. So you can visit the page to find out any detail that you want. But we're not soliciting funds for that either. Since we were on that topic, right? You can look, you can make a reservation, but we're not actually soliciting funds quite yet because we are in a testing the waters phase. Yeah, you're right. We should have got that out of the way immediately. Um, so tell me, why is real estate crowdfunding considered a great option for investors with limited funds?
Oh, good question. So minimum investments are low. It democratizes the process. It allows your average investor who is non-accredited or fully sophisticated in the real estate space to gain access to an offering. Minimum investments are low, making it easier to enter the real estate market. Crowdfunding offers lower barriers to entry, enabling people to start with smaller amounts, as little as $500. Some campaigns, people have started with amounts of $100 to get into a real estate project that they otherwise may not have been exposed to. Also allows them to start to educate themselves on the process as investment updates are made. If an investor has enough and they want to spread it across a portfolio of, say, Class A properties, Class C properties, industrial properties, storage properties, that also allows for a portfolio diversification and much less, makes it much less riskier endeavor.
Yeah, that's a great
Excuse
point.
me.
Especially since you talked about that diversification, and since you kind of touched on that, can you tell us a little bit about why that diversification would be important, and how real estate crowdfunding also enables investors to diversify their portfolios with smaller amounts of money?
Yeah, so the diversification allows for investors to choose from various property types and locations, reducing risk, as I indicated. The types of properties, the options, residential, commercial, industrial, each offering different risk and return profiles. It allows them to explore niche markets like medical centers, agricultural land, other types of offerings. Uh, it allows for passive income potential, so they earn passive income through rental payments or profit sharing, with distributions typically occurring regularly. What that means by passive income is it's not income that you have to actively go out and work for. It's that your money is working as you sleep.
Great point. Really thank you for that. And one of the things I'm going to ask you to drill down on a little bit here is passive income again. A lot of people want to invest in real estate. A lot of people that I know, they kind of want to start out as fix and flippers. So, they have to save up a lot of money. And can real estate crowdfunding truly generate passive income for investors?
Yes, yes, it can. Uh, and again, it requires some due diligence on the investor's part. It's not just an investment that set it and forget it. It's more of, do some research. And quite often that research can be in the form of less than 15 to 20 minutes. The time you sit in a drive-through or the time you spend, in a waiting room. And by due diligence, I mean, what is the asset type? What is the offering? What does it talk about? What is the time frame? What are the targeted returns? What's the expected return? Um, and reaching out with any questions that you have to that particular offering. In this case, we have a Test in the Waters campaign up, which will quickly become a Reg CF by mid to late next week. Um, so, and liquidity. So, but we can get to that. And expert support is, something else. But I don't want to get ahead of myself. Go ahead, Mr. Bill.
Yeah, absolutely. Those are some great points. Especially talking about the due diligence. So, what kind of expert advice and support can investors expect to get from the real estate crowdfunding platforms as they perform this due diligence?
So, expert management and decision making tools, educational series, webinars, like we're on Silicon Prairie. Silicon Prairie offers a large suite of investor centric, investor focused educational tools that teach you how to do due diligence. In the day of AI these days, where in Google, it's just a basic research that says, okay, how do I perform due diligence? If you still have questions, you're always free to reach out to that particular campaign, or in this case, Rancho Affordable Living or proactiveimpactfund.com, or myself via LinkedIn or Mr. Bill to get some guidance on what it is that you need. And again, we're not providing any legal services, financial advice, or anything of that nature. That's for a registered investment advisor or professional, such as CFP or financial planner, that sort of thing. However, we can answer or speak to basic questions related to our specific offering and our specific targeted potential returns.
Great information. How does the liquidity of real estate crowdfunding investments compare to direct property ownership?
So with crowdfunding, sometimes you can sell shares on secondary market though liquidity may vary. So, and you have to be aware of potential penalties or fees for early withdrawals. Traditional real estate, so that's on the crowdfunding side. Traditional real estate, you need to liquidate the property through either a sale, refinance, or possible syndication.
Great information. So again, back to the platforms. What measures do crowdfunding platforms take to analyze and mitigate the risk for the potential investors?
Uh, okay, so platforms perform due diligence and use risk assessment tools to protect your investments. These measures have a track record of safeguarding investor interests. Uh, However, excuse me, don't rely on them solely, to do the work for you. Basic due diligence will save you a lot of time, effort, and heartache. Uh, One series that I watch frequently is American Greed, and when I watch some of the episodes on American Greed that comes on CNBC, I look at some of the investment scams or schemes that have happened to people, and I'm always thinking to myself, well, if the person had just did this, that, and just did some basic due diligence, they'd have a better outcome. Even if you're referred by a personal family or friend member, sometimes you still need to do your own due diligence. If you get that gut feeling, if you think that, well, something may be off, maybe this is too good to be true, uh, then it probably is. So it's very important. I cannot emphasize enough due diligence, risk mitigation, and to find out what it is, how viable it is, how does this work for me? Is this something that I should be allocating resources, funds towards?
Great. Now, here's a big one and a really important one for investors out there, especially crowdfunding investors, who this may be one of their first crowdfunding opportunities that they take advantage of. How do the transaction costs of real estate crowdfunding compare to those of traditional real estate investments?
A great question. So quite often, depending on what the offering is on different platforms, but in general, crowdfunding involves platform and management fees, often lower than traditional real estate transaction costs, and you need to be aware of any additional fees. However, in a traditional transaction, you'd bore the costs of the escrow, due diligence, inspections, and things of that nature. All of that is built into the crowdfunding process. So, and when I speak here, I'm speaking for proactive. So for us, we work to offer a targeted net, return. That okay, for example, if it's 7% or 8% or whatever the percentage may be, that we want to say, okay, Joe investor or Sue investor, this is our targeted return to you of 7% net of fees. So that it's very clear, very transparent, easy for accounting purposes, and simpler and more efficient to figure out what would my expected return be on this amount that I intend to or may allocate to this particular offering. So, however, there are some crowdfunding platforms out there or syndications you need to be very careful of because they'll tout a certain percentage. And when all is said and done, you receive either half of that or not even close to what it is that they've advertised. And I've seen that quite a bit. So we also have a Reg D 506C fund. And what I'm seeing a lot of operators do is they'll tout a number, and I'm diverting a little bit here off the subject, pivoting. They'll tout a number, say 9%. Oh, we offer a 9% pref. And when you get down to the weeds of it or the numbers, it's much less. So for myself, just doing some basic due diligence and tire kicking of our own, I've called companies and they says, oh yes, we offer a 12% pref or we offer 10%. And so I'll just be very basic and say, okay, today I invested $100,000. When do I get my first payment? How much will it be? Quite often I've heard numbers that, okay, well, Mr. Williams, in 8 or 9 months, we'll send you, maybe if we have a project, we'll send you $500 per month. I says, okay, or 1,500 a quarter on 100,000. Says, okay, that sounds like a 6% pref to me. Where's the 9%? Oh, well, we offer 9%, but it's 6% with the carry, or it's 5% with the carry, or well, on the back end, we're going to do. And so it's not transparent. It's not, in my view. Now I could be wrong here. And there's lots of people on LinkedIn. If there's something I need to be educated on or something I'm missing, please feel free to reach out. I'm always open to learning and guidance and learning more about what it is that other parties are doing or why it's acceptable. Here at Proactive, our targeted pref, just for our regular fund, I'm just giving you an example here, is 9%. And so that means that the investor is going to receive a targeted 9% pref for the year, not 9% with this carry or that carry. It's just 9%, period. So I just want to make that clear. And excuse me for digressing.
Oh, no, thank you very much for those important insights. I think one of the values that someone with 25 years or over 25 years in the real estate, development and investing game brings to the table, right, are those experiences and insights that, that people who may be new to this, may not be aware of. So we definitely appreciate that. In what ways does real estate crowdfunding democratize access to real estate investments?
Oh, okay. It allows us. So just think of it in broad blue collar terms. It allows for the little guy to get in and to be part of it and to build a portfolio and to start to learn about it and start to gain knowledge and hopefully gain momentum. Uh, so it democratizes a real estate investment, allowing broader participation, showcasing success stories of new investors thriving. And it allows the investor to get on the runway and take off. I'm always flying from one location to another as a district regional manager for Rancho, for Proactive, for our Oz fund, for all of our funds. And what I notice is no passenger jet or no jet or no airplane, period, for that matter, just rises. It gets on a runway, builds up momentum, it takes off. Helicopter is a different story. However, there's a process there as well also. So it allows for an investor to start out with a certain amount of money, whatever that may be, and to build up a portfolio, to see some successes or experience some successes, to cut losses if there are any, or to continue to build that portfolio and to learn different strategies in real estate investing and potentially to reach out to that platform or to the fund manager or to the sponsor, such as myself. And a quick story I'll give you. I've had novice investors to reach out to me and say, "Well, Dr. Van, I inherited 50,000, or I inherited this amount of money, or I received a settlement from work, or I got money in a car accident. What would you suggest?" And we may engage in a consulting advisory role. And I've helped one person buy a fourplex in their hometown in Illinois that they bought, and they were going to buy a single family home. And I says, well, okay, if you're already living in a 2-bedroom apartment and that works for you, why not buy a 4-bedroom flat? A 4 flat property where you live in one unit, the other 3 pay for themselves. You have someone who's helping you pay the rent. You can live in a fairly more decent neighborhood or of higher quality because you qualify for more of a mortgage now. However, I never advise a person to go to the max. Just stay, moderate or conservative. For example, if you're approved for $500,000, I'd say, well, buy a place for 350, 375 max. In case you fall on hard times or you have vacancies, or if you're not a good saver, or whatever those circumstances may be. So
Great, thank you very much.
yes.
How does real estate crowdfunding provide investors with more control over their investments compared to REITs?
Well, they enjoy more
And
decision.
maybe explain a little bit about what a REIT is for us, if you would.
Okay, so I'll answer a question, then I'll get to explanation. So as it relates to control over investments, quite often the investor enjoys much more decision-making power in crowdfunding projects compared to REITs, though with this comes additional responsibilities. And often think of a REIT, there are private REITs, but there are quite a few publicly traded REITs. One I personally like, and it's my own personal preference, is I like Simon Property Groups, and I also like Realty Income, ticker symbol O, because they provide a steady stream of income. And Federal Realty Investors, who's increased their dividend consistently over the last 30 plus years. A REIT is a real estate investment trust, publicly traded. 90% of income has to be distributed to investors. Another REIT I like that is aligned with affordable housing. And I have a little bias here, so small disclaimer. We sold a property to publicly traded UMH. That's their ticker symbol. UMH.com. The ticker symbol is UMH on a big board, New York Stock Exchange. They're a great affordable housing REIT if your values are aligned with social impact affordable housing. And by the way, they do pay a dividend. Um, So real estate investment trust, you don't have nearly any control. It's just, you're in a pool with, hundreds of other, thousands of other investors, whereas a offering is pretty focused on one specific region, location, what have you, as it relates to crowdfunding.
Okay, great. So before we start to think that crowdfunding is the end all to be all, what are some of the primary risks associated with real estate crowdfunding? And how can investors manage those risks, right? There's always business risk in any type of investment.
Yes. So common risks include market fluctuations, um, project failures, failure to conduct due diligence and consider insurance considerations. So, and you manage the risk with due diligence, asking questions, lots of questions. No question is stupid. And getting a real sense of what it is that you're, investing in. And it's not a gamble. You're not rolling the dice. Although we all want to hit dice, meaning we want to win. You're not rolling the dice. You're taking a calculated, measured risk according to your risk tolerance. I think it's important that people develop a profile or what their appetite for risk is. If you invested $100 or $1,000, what happened if you were totally without this money 6 months to a year from now? Or if you had to think, the worst case scenario, how would that affect you? And kind of back into it from there and go from that vantage point.
Okay. We kind of touched on this a little bit, but if you like, we could go a little bit more in depth here.
Okay.
How important is it to perform due diligence on a real estate crowdfunding platform before investing?
You want to identify red flags that indicate unreliable platforms. So your basic reviews, you want to evaluate platform credibility, track records, management expertise. For myself, having invested on a few platforms, I'll call the fund managers. I'll look the fund manager up on LinkedIn. I'll call, ask questions. If they say they're invested in ABC Warehouse, I'll go to that county's website, look up the address, see who the title is vested in. I mean, we live in an age of public information. So a few steps can go a long way. It's something you can do on a lunch break, something you can do in between time on your phone in a waiting room. Uh, it's just no reason not to perform some level of basic due diligence.
Great answer. Thank you very much.